Okay, so in your chapter summary here, you've got a really useful summary of everything we've discussed, and this is really useful for a revision aid. So instead of going back over all of your notes, you can then just look here at this summary diagram of everything that we've covered in this chapter to basically summarize your knowledge. And you can then look at this and say, okay, do I know that particular area, or is that something I need to go back over and revisit? So we've looked at our approach to the consolidated financial statement. We've looked at our basic process there, combining things on the line by line basis. We've looked at our standard approach for consolidated accounts, who is in our group, how long have they been in our group for, setting up our pro formas, transferring figures from the questions, and then of course completing our standard workings and then closing off our pro formas. We've looked at goodwill. We've looked at our standard calculation there of goodwill. We've looked at dealing with impairment of goodwill. Now, of course, if it was a wholly owned subsidiary, you debit expenses, credit goodwill. Of course, if it's not wholly owned, then we would need to share out. Yeah, so if it's not wholly owned, then some is going to go to our non-controlling interest. We would share out that impairment, wouldn't we, between the group and the non-controlling interest. We've looked at our accounting treatment for goodwill. So we know that positive goodwill, we do our calculation, it then goes on our consolidated statement of financial position, and then we're going to test it annually for impairment. But if we've got negative goodwill, we need to reassess the values of those assets. We're going to be crediting that straight off to the profit and loss account, and that's going to be a bargain purchase, and that will be shown in the operating profit of our profit and loss account under IFRS 18. Normally, we don't recognize internally generated goodwill, but obviously if it is purchase goodwill, we're paying that premium as part of acquiring a subsidiary, then that's when we do show that positive goodwill on our consolidated statement of financial position. We've looked at fair value measurements there, so we must show our assets at fair value. We've looked at how we account for consideration as we're acquiring a subsidiary. So measuring obviously assets at fair value, liabilities. We've looked at deferred consideration, discounting that to present value. And we've also looked at contingent consideration, and we looked at how we would deal with that contingent consideration, and obviously we'd need to take into account the time value of money as well. So that needs to be measured at fair value. They would give us that information in a question. Speaking of fair values, we've got our definition of a fair value under IFRS 13. Largely, it's what we would be buying or selling something for in an arm's length transaction. Measuring non-controlling interests at acquisition. If we are using the proportionate method, then we know that there is no goodwill for the non-controlling interest under the proportionate method. That's because we are assuming that we don't know what the non-controlling interest paid, and therefore we're just assuming that it's going to be their share of the fair value of those assets. We've also looked at pre and post acquisition reserves, being careful to read a question. How much of our reserves are pre-acquisition, how much are post, so that they go into the correct workings. Dividends from subsidiaries, dividends paid to the non-controlling interests are not presented in our statements of financial position. And dividends paid to the parent, they need to be cancelled on consideration. We're going to be taking those out of our profit and loss account. We've looked at removing intergroup balances because in essence we cannot trade with ourselves. The group accounts are for one single entity. So we've looked at removing profits, we've looked at removing intergroup balances, and the same with the transfer of assets there. We've looked at removing excess profits, and we've looked at adjusting for excess depreciations as well. So really, really useful summary diagrams there of everything that we've talked about in detail within this chapter. And as I say, these summary diagrams are extremely useful once you've completed your tuition phase and you're then looking to revise your chapters and practice questions.